Welcome back. You're tuned into Chartbusters here on CNBC-TV18. Well, the company that's on our radar is Sagar Cements. They reported a strong showing in the first quarter, good pricing, good execution, and it came on a weak base. Now, they reported a profit after 4 consecutive quarters of losses. Mr. Sreekanth Reddy, the Joint Managing Director of Sagar Cement, joins us on the show. Hi, Mr. Reddy. Good morning. Thanks a lot for joining on the show. We would request you to actually join us more often. But it's a good time that you're joining in because the numbers have been fairly good. And I think I understand that you're joining in from your Andhra cement plant, if I'm not mistaken. But good to see you have good connectivity. Now, a couple of points out here. You know, the street has always said Sagar Cement, there is good value out there on an EV per ton basis. Good promoter as well, good pedigree. The problem is delivery. Now, for this year, tell us what kind of volume number are you going to deliver, which you're confident about. And also tell us on an EBITDA per ton, you've done 850 rupees per ton. Looks quite good, but now input costs have moved up a little bit. You have the monsoon season, that will be a bit of a dampener as well. Steady state, what kind of EBITDA number should we work with on an average for the year?
Yeah, good morning, Mr. Nigel. Thank you again for hosting us. I think it has been a long overdue kind of performance from us. Of course, last 2 years was tough. One, the market pricing was relatively lower. And at the same time, we doubled our capacity from close to 5.5 million to 10.75 million over last 2 years. So most of the ramp-ups happened during last 2 years. I think on the expected lines, the cycle changed, the demand cycle, and so is the price cycle. So that helped us to perform relatively better. But I think we are yet to catch up with the best cycle, which we believe is yet to come, because most of the neighborhood, especially Amaravati and Andhra and Telangana demand, likely to pick up from here on. So that should help us perform even better than what we have done so far. In the current year, we believe that we could do close to 6 million tons. With an EBITDA on an average at around 600 to 650 rupees EBITDA per ton kind of a number, Mr. Nigel.
600 and 650. The first quarter you did about 851, and you believe that going forward prices will only improve from here on. So what stops you from doing at least 800 to 850?
Yeah, internally, again, I need to pencil in something with a lot more realistic kind of numbers. Of course, in the first quarter, we also did receive an incentive, which is almost close to 32 crores of it. So that also helped us to show a better number. But we are trying to be realistic in terms of 600 to 650 is definitely achievable.
So
we don't see a challenge with the pricing environment, but I think we need to be cautious too, right?
Yeah, I understand that. So all things considered, close to 400 to 420 crore EBITDA for this year is a relative possibility here, right?
Yes, sir. I think those numbers look doable realistically.
Got it. All right. A quick question, sir, in terms of capacity. As you said, the last few years, you've steadily increased your capacity. And from being a marginal player, now you're a relatively larger player. In your core market, what is your current market share? And where do you see that number headed? And in terms of absolute capacity as well, from around 10.5 million tons, where do you want to go?
Yeah, the stated goal for us from a medium to long-term perspective is to double every 10 years. So the indicated number was to reach 10 million by 25, which we could achieve slightly ahead of time. So the immediate target is to reach 12 million by FY27 and 15 million by FY30. And by FY35 to reach to 20 million, Mr. Nigel. That's the stated goal. At the same time, though the market share is not a big KPI for us internally, but fortunately, we are one among the top 4 players in the markets that we operate, especially the AP and Telangana. Yeah, we are one among the top 4 to 5 players, Mr. Nigel.
Things are heating up in AP and Telangana. You are increasing your capacity, etc. as well. How much of this planned capacity increase would be organic and how much of that would be inorganic?
Yeah, I think Andhra, post-acquisition of Andhra, sir, we are currently expanding from a 2.25 million to 3 million. The first part of the expansion is likely to be completed before 30th of September. 0.75 million ton grinding capacity to be added either end of Q4 current year to the middle of Q1 next year. So that would be I mean, this is purely a brownfield kind of an expansion at Andhra. And as you know, Andhra is more an acquisition for us. We did acquire Andhra close to 2.5 years back. So most of it, except for Matampally, rest of all our assets in the entire portfolio has come through M&A.
Okay.
So this 30 million also happens through M&A only, is what we are saying.
I think up to 15 million, we are very clear it is going to be mostly on brownfield. Yeah, beyond that, we need to really strategize as we come close to that milestone of 2030.
Okay. All right. Mr. Reddy, let's get to the chase then. Let's go straight to that. Since you spoke about Andhra Cement, what if someone gives you, Mr. Reddy, a good valuation and says, Mr. Reddy, we want some presence in Andhra, and you have turned around the asset. If they write a check, how big the check has to be to make you sell that asset?
I think it's we are in business, Mr. Nigel. I think that is something which is very relative. It was a strategic acquisition from our side.
Correct.
Fortunately, the asset turned out extremely well.
Yeah.
There were many positive surprises from what we have expected to what it is, especially on the resource side.
Yeah.
When we started looking at this asset from an NCLT perspective, from then to now, we expected some amount of increase in terms of resources. But fortunately, since we started getting into detailed prospecting, the resources turned out to be a very, very positive surprise. And secondly, the asset ramp up is happening at a pace and a quality of kind of an asset. We believe that this would be one of the best assets in the market.
Mr. Reddy, phenomenal turnaround, everything, resources good. Will you sell it? You know, if there is a good, if someone gives you a good enough, I think what you bought it at, if you could, I mean, if you could help us jog back the memory, I think you bought it at $25-30 per ton. You could help me out with the number. What if someone gives you, say, $80 per ton? Will you be a seller?
No, I think at 80, less than 100, I don't think we would look at any of those discussions, sir.
So at 100, you're a seller.
More than 100, you will sell, right?
No, anything beyond, again, it's something which we have to see how the discussions are going to happen.
No, but you are in business, sir. So you wouldn't buy an asset just to turn it around and flip it over for a much higher price, or would you consider that if that was to happen?
No, that never happened in the past, sir. But you know.
But now things are heating up, right? People are eyeing Andhra. They are looking at Andhra as a potential, and in there you've turned this business around. Over $100 per ton is something that is attractive. At least people can get to the table, right?
I think beyond 100, we would then start discussing with our internal stakeholders, sir. But less than that, I don't think we are engaging in any way.
Okay.
Okay. Has anyone made an offer?
Has anyone made an offer, sir?
See, I don't think we have any offer on the table, Mr. Nigel.
Got it. Okay, so that's out of the way then. We'll get back to Andhra. I have a few more questions. But since you're talking about increasing capacity and suddenly Deccan Cement, we are here on the opposite side of the country, on the west coast. But out there is plenty of buzz for the last many years. Deccan Cement could be on the block, could not be on the block, maybe on the block. Would you consider writing a check to buy Deccan Cement? Does it fit into your scheme of things, or you would avoid it?
I think it's a very good asset, sir. But I think it is not a strategic fit for us, sir.
Not a strategic fit.
Not a strategic fit.
No, because I'll tell you why. Suddenly, South India is heated up. We had the Ultratech management saying that South could be the new North. So there could be some interest out there. What if someone writes a big check for you, sir, and says, I want to buy the full of Sagar Cement? I've asked you this in the past, but would you be a seller?
Yeah, Mr. Nigel, when Holcim themselves sold here, not many people expected. I think it's all something which we have to see as it comes. But we are very close to completing more than half a century of our existence in the business, sir. But we are not very emotive when it comes to the business. But we have to be very realistic in what is likely possible. Yeah, as you know, that we strongly believe that South is a good market. Perceptions apart, that's the reason why we have been investing heavily into some of the asset making itself, Mr. Nigel. I would leave the answer there and leave less for you to.
Right, we understand that. The one thing that I've learned over the last few years about North and South is North is a lot more consolidated and South has a lot more fragmented players as well in the cement space. Sir, just a couple of questions before we let you go, sir. One, you said that you are, willing to talk to people if it is over $100 per ton in terms of Andhra cement. Let's not get into what may happen or what may not happen. But would you ever consider the possibility of merging Andhra into Sagar, making it one entity itself? Because the shareholders of Sagar can then enjoy that turnaround directly. That's one. And secondly, what does your balance sheet position currently look like? Debt, repayment plans here?
Yeah, now the question is, I think this is 90% owned by Sagar Cement, sir. Ideally, and technically speaking, it would be good to merge. There were a few issues in the past because this asset we acquired through NCLT. There were certain constraints. We actually kept the minority interest in our mind, and we ensured that all of us would get the benefit out of it. And there are certain other issues which actually kept the merger not a possibility during the NCLT.
Okay.
But at this point of time, we would be more than happy to merge. But again, there are certain regulatory constraints because, as you know, we need to first comply with the minimum shareholding regulation.
So first, so Mr. Reddy, if I got it correctly, you'll bring the shareholding down first to 75%, and then you could probably look at the merger. Is that correct?
I believe that's what regulation is. So we would first like to comply with the minimum shareholding. Yeah, and would be more than happy to merge at the first instance.
I know the Vizag land that you've got is in process of getting cleared. Keep that aside. What is the rough value for the Vizag land at current estimates?
Andhra definitely has a land of close to 107 acres in Vizag city, sir. This was a 50-year-old kind of an asset which was partly acquired from the government. So at that point of time, the agreements were that we should get government clearance for us to do anything other than putting up the plant there. So given that, we are awaiting for regulatory clearance for us to
sell that land.
No, sell that asset because we are not into real estate. So it's
5 crores per acre is a rough estimate. 5-6 crores.
I think the government reckoner rate at this point of time is around 4.25 crores per acre.
So it could be around 500 crores the overall value of that asset.
Yeah, at around 450, and we have been consistently disclosing to the market that net expected could be somewhere around 350 crores net of the capital gains.
Take that point. Thank you so much, sir, for joining in. Nigel?
Yeah, that's it. Thanks a lot, Mr. Reddy, for joining in. Join more often. Good set of numbers. We'll track you to all these numbers. Rough estimates suggest close to around 400 crores of EBITDA is what you're penciling in for this year. Take that break, come back, continue our focus on markets.